Hey YouTube, this is Zach with Achilles Financial. We're back with another video where we're looking at the economic indicators that are going to be announced this week, and we want to make some serious progress on how we can play them. So first and foremost, we've got Tuesday. We're going to have coming out the important one, the S&P Case-Shiller Home Price Index. This is essentially showing the value of homes, and this is going to be an important one because we've seen record levels of home sales in a very low interest rate environment. So it's not necessarily surprising. What's going to be interesting is how are rental properties holding up, particularly in the larger cities, and our home prices occurring, or rather our home sales occurring in the larger cities. So that's going to be one that can definitely move the market, especially when we combine that with the consumer confidence, which is essentially where do we expect consumers to believe the economy is going to be headed on a go-forward basis. So those two can definitely make a move on the overall economic situation, and we should see that reflected in the markets. And again, the wholesale, or rather all the inventories are going to be coming out that morning, but that home price index is going to be out before the market opens, consumer confidence just after it opens. We've also got on Wednesday a lot more of the general run-of-the-mill weekly stuff, so the crude oil inventories is important. But then we've also got the pending home sales and the Chicago PMI. Again, the Wednesday information isn't really going to be anything crazy. I am going to be looking at the ADP employment change because this could feed into what we expect to see on Thursday and Friday with some of the unemployment data. Which on Thursday, as you can see, we do have the PCE prices, which is going to be important because, again, it's essentially a metric by which the Federal Reserve uses to look at and make decisions on inflation with. So that's going to be important. But the ones that I'm really going to be looking at in terms of market movers are going to be the initial claims and continuing claims. So make sure that we're watching those, because that is going to be important because it's really been holding steady, and we'd like to see those start to drop at a more significant pace. Lastly, Friday, which normally we don't have a lot of exciting info coming out, this is going to be the first Friday in the month, which means we do have the unemployment rate. This is the metric that really moves the market, the one that they judge the economy based off of, and that's why we're going to be watching it. So I'm interested in seeing this one just because it is going to be making a big difference. Again, you can see the consensus is 8.2. It's really going to depend on New York and California. So when the last series of this information came out, over half of the United States employees that were out of work were in New York and California, and that's largely due to the shutdown. So depending on the status of those shutdowns is going to be when we see that number really start to drop. And let's go look at the Fred data real quick. This is just the Fred database. As you can see over here on the right hand side, the last number was 8.4. You can see the consensus of 8.2 is not a big drop from there at all, despite the fact from the month before we were almost 2 percentage points higher. And you can see that we've come pretty significantly off that high in April, 14.7%. And the thing that this is important is because we are now lower than where we were in the 2009-2010 financial crisis. And I think that's very important. What we need to do is continue to see this sharp decrease, although I think it's going to start going from this kind of V shape or inverted V like everyone's talked about. And we're going to start seeing more of this slow going back to the normalcy, which is not a bad thing, but this is where we're at. If this is a negative surprise, I do think that that's not going to bode well for the markets on Friday. So that is the information coming out this week. Again, the non-farm payrolls and the unemployment rate will be market movers. The auto and truck sales, potentially, we may see something there, but I don't really see it as overall market movers, maybe individual industries. Next, I want to talk about some of the earnings that I'm going to be looking at that are going to be happening this week. I may short Carnival tomorrow. It really depends. Again, you can see that they were up a little bit on Friday, but I don't know how I feel about any of the cruise lines aside from wanting to short them. But they may come out and say something exciting. They do move a lot based off earnings, so we'll see that information here shortly. But again, I really don't have big earnings plays set up already like I generally would, and that we will see starting in 2 weeks when some of the larger institutions report. We also have Micron that I am going to consider because I really like the semiconductor world. I may make a move on this one, but that will be a day of play. But this is the stock to watch, MU, Micron Technology, just because they're one that does have a lot of value and they do tend to move a little bit. We're not going to see a 10 to 20% move, but we may see a small one, so this may be a good one for some call options, maybe some debit spread, or if the stock has a big run up, I may just sell premium. So we'll see onto that one. But then Wednesday and Thursday, there's nothing that I'm excited about. I'm just showing some of the ticker symbols that you can see here, but there's not really anything that I am just super excited about making a move on. But as you can see, they're still available. Thursday's kind of the same boat. There is Pepsi. I may look at Pepsi, but really what I'm going to be looking at is Coke. So even if Pepsi has good reporting, I am probably going to make a move on Coke if that is a option. But that is what's going on this week. I don't have any real hard setups at this point in time. There's not a lot of movement, but we'll see. And I hope that you found this helpful. And if you do, please drop a like and subscribe. Thanks, everyone.